Today is Monday, July 29th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Let's start with the ag markets today. Steve, you were in South Dakota last week at the Hefty Seed Farm Field Day event. What were the farmers talking about?
There was a good turnout. Got interrupted a little bit by a little rain, but all in all, the farmers are still sticking with that the crop is smaller than what the trade is trading, and that they're not going to sell grain, especially corn, until later. And some are going to try to store, waiting for either a trade deal or the USDA finally saying that the acres and yields aren't there and prices rally.
Is this a good place, though, Steve, for farmers to increase old and new crop cash sales?
I think if you're a fundamentalist and if you're a technician and if you look at what's going on in the market, yes, because cash basis levels are strong and the futures, while backing off from season highs, could go lower if the weather is okay in August. It's just that the farmers won't sell these prices.
What is the latest on the U.S. and China trade talks?
Tuesday and Wednesday, U.S. negotiators will be in Beijing with the Chinese negotiators. On one hand, the Chinese have said that they've given the approval for some private companies to come in and buy some U.S. soybeans as a goodwill gesture. We haven't seen those sales yet. It feels, though, like the Chinese are still trying to stick with the policy that when all of the tariffs dropped before they talk seriously, and that they also do not want to be forced to buy a certain amount of U.S. ag products. I think that the U.S. negotiators want to go back to the May deal that they had before the Chinese changed all their minds. So maybe the best thing that could come out of this is agreeing to come to Washington and continue the face-to-face talks.
Weather. Steve, what is the latest forecast for the Midwest August weather?
It's interesting in that both the American model and the European model are talking about a little bit below average precip for much of the Midwest. As fronts kind of come across, they kind of weaken and lose some of their punch. The one model says that we are going to be cooler than normal, and the other one says we're going to be warmer than normal. So I think right now the market is probably looking at the glass half full, in that there's no real heat or there's no real dryness that could stress the crop, but the farmer still needs probably more rain than is forecasted to grow the yields that he's hoping he's going to get.
Finally, Steve, we have an important USDA report on August 12th. What is the trade looking for?
Looking for a slight increase in the 18 and 19 corn and soybean carryouts because of lower demand. And then it's kind of a crapshoot as to what you think is going to happen for 19 and 20, because most people are looking for lower carryouts, mostly in the corn because of a lower crop number than USDA is using. In beans, the same thing, a lower crop number than USDA is using. And in wheat, probably a higher feed usage number. So in general, it should be a neutral report. It may not be until October until we know what the final acres and yields are going to be.
Alan, gold futures broke out of a congestion triangle to the upside a little over a week ago, but since then there's been very little follow through. What does that mean, and what is your outlook for gold futures now?
Well, of course, we did break out to the upside, limited gains, but it still appears that the fundamentals are very much behind the long side of the gold market. We still have interest rates that are very low and likely to get lower. From time to time, we have the flight to quality buying that comes in. So I think this is just the beginning of a bull market in the precious metals, both gold and silver. So every break, I think, should be used as a buying opportunity. There's a lot left to the upside in gold and silver.
You mentioned interest rates. Why are the financial futures markets pricing in a 25 basis point cut in the Fed funds rate when on Friday it was reported that the GDP, the gross domestic product, was stronger than expected?
It was better than expected. Of course, a lot of the U.S. numbers have not been quite that impressive, but I think as importantly, overseas economies are really not doing that well, especially in the Eurozone. In fact, in the Eurozone, they have negative interest rates in a good part of that region. So it still appears that the Fed is going to cut rates on Wednesday. In fact, financial futures are predicting there is virtually almost a 100% chance of a 25 basis point cut, and there may be some others to follow.
Finally, Ellen, the S&P 500 futures advanced to a new record high on Friday. Why are stock index futures so strong, even though there appears to be very little, if any, progress on the U.S.-China trade situation?
Well, I think this shows again that it all comes down to interest rates. Of course, we have had the various geopolitical problems from time to time, and the U.S.-China trade situation is one of the biggest of the geopolitical issues. And yet, interest rates remain very supportive. In fact, now likely to get even more supportive as all of the major central banks in one form or another are likely to ease credit, including the Fed. So it's interest rates that dominate, and I believe that fundamental will continue to support stock index futures for quite some time.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.